In the last video, we looked at what Fibonacci is and what are those numbers and how did it come into existence. And in this video, we are going to look at how to draw the Fibonacci retracement, various tips and tricks, and how to even set up the Fibonacci. So try not to miss it. It's a lot of information on one particular tool. So let's get started. Now that you know what Fibonacci is and what those numbers are, let's look at how these numbers are useful for us. So the first thing what we are going to learn is about the Fibonacci retracement. Just like the name, the retracement, that is another term for pullback. So first things first, you need to understand what actually a pullback is and also the impulse move, because we are going to draw the Fibonacci only for the impulse move right now. Now, just to recap on things, how the market moves. So the market, let me move this. Yeah. So the market moves up. Okay, I'm taking an uptrend followed by a pullback and then an uptrend. So basically this is the impulse move and then followed by a pullback. In Fibonacci terms, we call this as extension. Okay, it's another term for impulse move. And for the pullback, we call it as retracement. So extension, retracement. The problem what most of the traders what they find is how to identify this impulse move. So impulse move will be always the bigger move compared to the pullback. Okay, it's always like that. I can't say always. I would say 95% of the time it will be like that if it is in an uptrend, because there are times where the pullback is quite deep as well. So when the market is in a strong uptrend, you can definitely see that the impulse move is much bigger than the pullback. Okay, so here with the help of retracement tool, the Fibonacci retracement tool, we are trying to figure out how much this pullback is all about. So let me show you what the Fibonacci tool is all about. So on the third one on the left side of the tools, we have this Fibonacci retracement. Click on that and then draw it somewhere. So this is what the Fibonacci tool is all about. These are the numbers where the retracement can happen. So these levels are like pullback levels or support levels for the impulse move. I know it might be a little confusing right now, so let me show you the way to draw and what this means actually. So again, let's take the trend line tool and then market goes up. All right, so this is the impulse move in an uptrend, and then we have let's just say that we have this candlestick pattern over here, a rejection candle, right? So basically what it is saying that by seeing this rejection candle, we all know that there are good chances that the market can do a pullback from here. Now, we want to know as traders that if you're a trend following trader, then you need to know whether the market is going to do a pullback till here or here or here, and then trying to figure out how to get involved in the trade and then probably try to, capture this next move. If you're a counter trend trader, then you should know where to book your profit. So there are two methods in this. One is the counter trend move, and the one is how to get involved in the trending in a trend. Okay, so I'm not going to talk about the strategies, but this is a video specifically for how to draw the Fibonacci and what you should be looking at it. Okay, and yeah, so we'll take the Fibonacci retracement tool. Okay, now here's the rule. We will always draw the Fibonacci for the impulse move. Okay, not for the pullback, only for the impulse move. Now, since the impulse move was up, okay, we will be taking our retracement tool and draw from swing low to swing high. Okay, this is always the case. If it is an uptrend and if the impulse move is going from swing low to swing high, then you need to draw the Fibonacci from swing low to swing high. Okay, if it is in a downtrend, okay, so let me show you where it so this is the impulse move, and this probably could be the pullback. So we will take our retracement tool, and in this case the impulse move is going down. Okay, so from swing high to swing low it is moving. So we will also draw the Fibonacci retracement tool from swing high to swing low. All right, so that's for the downtrend. Now coming back to this, a couple of minutes back I mentioned that these level acts as support. Now support for what? So this is the impulse move which it has done. Okay, I'm going to remove this candles. Okay, now the market, if it is going down, then the market will be taking the support of either of these levels. Now how do we understand whether this is the which is the level which the market might be taking the support? Now that is by looking left. Always look left, market will give you a clue. That's the whole foundation of technical analysis. All the time, almost all the time. Okay, if it's in a strong trend, maybe probably it may not even respect any of this Fibonacci move. It will just do a tiny pullback and then boom, it will just go up from there. But majority of the times it will take one of these level as support. So if you ever see that the market is just bouncing off from 382, then that means that the trend is really strong. Okay, and let's say that the market is coming down to the 50%. Now 50% is not a Fibonacci number, it is more as a psychological number. Now I said 50%, here it is mentioned 0.5. So it is just a way of depicting it. So if you go here and change the settings, you will get the 50% over here like this. Okay, so either ways, 0.5 is not a Fibonacci level, it is more of a psychological number. For us human beings, it is easy for us to see 000s, 555, right? All those even handle numbers. So in the same way, the Fibonacci also starts from 0 and ends with 1. 50% is just the middle of it. So it's not a Fibonacci level, it is more of a strong psychological level. Market do respect this a lot. Now the next level what we have is the 618, which is otherwise considered as the golden ratio, or you can say that it is considered like a complete pullback for this particular impulse move. Also we get a better risk to reward as well when it comes to 618 completion. The next two levels, that is the 786 and the 886, these are like a weaker, the trend might be getting weaker and weaker. So if you see that the pullback is doing, it's kind of a deeper pullback. So there are good chances that the trend might get reversed from here. Also, there are opportunities you might get over here, especially for the harmonic trading patterns. So 786 and 886, they play a huge role when it comes to finding those patterns, advanced patterns. So that is all what this levels is all about. Now let's look at in the chart how to draw in the live market. So you can see it over here that the market has been doing a number of impulse move and a pullback. So here it is, an impulse move, a pullback, another impulse move, a pullback. So let's try to figure out how to draw in this case, and then later I'll show it in the what is happening right now. So let me remove all this. All right, so take out a Fibonacci tool. This is the impulse move what we have, right? And this is the pullback. So what we'll do is, to understand how much this pullback is, we will draw from swing low to swing high. Okay, and you can see that the market has tested 618 perfectly over there. Okay, yeah, it's been playing around in that range between 50 and 618. The idea is that we need to figure out how to get involved in the trade. Now there are so many ways now you can get involved in this. My particular way is I look at this Fibonacci and see some kind of chart pattern reversals over here, and that is my entry technique with, you know, like different indicators like RSI divergence. That is one of my main entry techniques along with the chart pattern. So yeah, this is the critical point when it comes to getting involved in the trade. And also if you look left, we do have the structure over here, you see. structure, right? Again, let's remove this and we'll see that market again went up. It did a pullback, right? Look left, where did it do a pullback? Previous structure. Also, let's see that whether the market has respected any of the Fibonacci level as well. So take out your Fibonacci tool and draw from swing low. Since the impulse move is up, so we'll draw from swing low to swing high. And you can see that the market has tested 382 multiple number of times. Now you can make different strategies on that, like for example, if you have a reversal candle or a reversal entry techniques at 382, then you can keep your stop loss at the next level, that is the 50 or 618. Now why I'm saying that, because remember I mentioned that all these level acts as a support level for this particular impulse move. Okay, so there are various ways of using this Fibonacci for strategy purpose. Now again, I'm saying I'm not going into details about the strategy. This video is all about how to draw the Fibonacci. Also, one more thing which I figured out is there are some traders, they show like drawing like this, or probably keeping it over here, or from here to here, like body to body. Okay, this is wrong. Okay, because you need to consider the wick as well. Wick is very important when it comes to market. Wick means there is the market has the potential to go all the way up or all the way down till there, and that is the importance of wick. So we need to consider the wicks when it comes to Fibonacci. Okay, even when we are drawing support or resistance zone, we need to consider the wicks as well. Okay, so yeah, now forget about all the previous charts. Let's look at over here. Now, what do we have here is we had a great fall last week on EURUSD. So this is the big impulse move, and this is the pullback which it is doing. Okay, now if you ask me where is the pullback going to end, I can easily say by looking left that probably over here. Okay, or maybe over till here, because the market has been testing quite a lot of times over here, right? Now if I want to improve my the way of drawing the zone or these lines, what I'll do is I will take out my Fibonacci tool and start drawing the Fibonacci retracement. Like in this we have the impulse move from swing high to swing low, so I will draw the same way. So this is the swing high and this is the swing low, right? So I'm going to take that, and you can see that 50% is right over there. Okay, and yeah, this one is not respecting the 618, I would say, but yeah, I can say 786 is a decent level for this. Okay, so if this one is not let's say that the market is just blown up after the 50%, there are good chances that it can go and test the 786, and yes, it can even turn around from 618. But remember, Fibonacci will make sense only when you have a confluence with the structures. If you're not using structures as a way to analyze with the Fibonacci, then Fibonacci won't be of that great help. Okay, now we can see that why did I remove that? Okay, we can see that the market has been playing around the 382, and there are chances that it might do a reversal from here as well. There is nothing wrong in that if you find any way of entry technique on this, because if you ask me, I'll be trying to short the market on EURUSD at any of these levels, because honestly I don't know whether it is going to retrace from, I mean, going to continue its downtrend from 382 or 50, 618, 786. I have no clue, right? All I can do is, if my strategy is telling me to short from here at 382, I will short, no questions asked, because that's the belief I have in my trading strategy. And this is the same way you should be also trading it. Just because you have 618 as the golden ratio, you cannot expect market to always do a retracement till 618. It hasn't done over here previously when I was showing it. Not all the time it will respect the 618, be it golden ratio, complete pullback, say whatever. But if you're not using your strategy along with your the structures, then it is not going to make any sense. Now here I will tell you how I'm going to enter the trade, what are the reasons for me to enter this trade. Now if you look at this, this looks like a head and shoulders for me at 382 retracement. Okay, I have an impulse move over here, and this is the head and shoulders. Now it is still forming, so I do not have an entry as of now, but let's say that we have a breakout of this. Okay, I never draw the trend line like this. I do not believe in that. I need a breakout below this. Now if my risk to rewards are matching, then I will definitely short from here. Okay, but I would prefer to short if the market at least tests 50% or 50 level. Okay, or 786. If the market if let's say that I entered on this, okay, let's just say that the market did break out of that blue horizontal line which I have drawn. Let's just assume that after me entering into this trade for a short, market just shot up. This does not mean that I'm going to stop going for a short position again. I will still short the market if I get any kind of reversal over here. Okay, so that's about the Fibonacci retracement, and also what I wanted to tell is this Fibonacci retracement tool, it won't be this neat as soon as you start drawing it. So the default settings are like let me show you. This is how the default setting looks like. Okay, all with all the rainbow colors. Now if you like it, keep it. Okay, but if you don't like it, right click on this dotted line and go to settings. Okay, and then you can see it over here. 236 is also a Fibonacci level which I do not use for various reasons, but I'm going to keep 382, 50, 618, 786, 886 is missing, so I'm going to add that, and I don't want any extension level, so I'm going to remove all these. Okay, and I'll keep 236. I mean, I won't keep 236. I'll just select 236 and mention 0.886. Okay. And if you don't want all this colors, just click on the uncheck the background and use one color. Okay, so I'll use this. If you want the lines to be thick, then you have the levels line over here, make that thick. And I always prefer the ratios to be on the right side, because we always draw the Fibonacci from left to right. Okay, and the market will be there on the left side, and so this may not be that clear when you're drawing it. So I will keep it on the right, and right now you can see that on every level stop you have the number. So if you want it in the middle, just keep it on the middle. All right, so anything else? Yeah, that's it. Click on OK, and voila, you have the Fibonacci over here. So I hope you enjoyed the session, and in the next video we are going to look at the extension tool, where you'll understand how much the next impulse move will be, or better way to say is where you should be taking out your targets or the next resistance level or support levels. So that's what the next video is all about. So if you don't want to miss it, do subscribe to the channel and share it with your friends, trader friends, and let them know what we are doing over here. And yeah, thank you very much. You guys have a good day.